All right, welcome everyone. Thank you for joining us. This is Adana representing Adana Homes. I'm a realtor with Coldwell Banker, and I have Edwin Davidian with me today. He is one of the top-rated loan officers and working with House Financial America. Thank you, Edwin, for being here.
Absolutely. Nice to be with you.
Thank you. Great. Okay. Guys, we are living in very interesting times. Everything changed overnight. We got a lot of uncertainty. We got a lot of fear thrown to the public. Everything is changing rapidly. Even government is making decisions daily basis, or I would say hourly. But here there is a big but. I want to talk about that. Human beings are capable to adjust and change. And all the changes is happening by the time. Some people getting adjusted quickly, some people slowly, but eventually whatever the change is it marriage, is it death, is it a pandemic, whatever it is, everyone is getting adjusted. And moving forward from here, there are 2 points I want to talk about them. Number one, never in United States history we had a time that people stopped buying real estate. We had different recessions. We had 2008, we had 9/11, and we've seen decrease of volume of real estate transactions, but it never stopped. And even as of today, that we are in this global pandemic with coronavirus, we see decrease in transactions, but we still see the movements and people are moving. I was checking my local MLS today and noticed for whole the LA County, just from yesterday until today, we got 230 new listings and 66 listings under contract, meaning 66 buyers and 66 sellers made movement. Of course, we had withdrawals, we had canceled as well, but we have the movement. The second point I want to talk about that is being a virtual agent and virtual client. Now, most of the realtors, including myself and my team, are doing everything virtually. Since we are in quarantine, we are not able to go out. And for more convenience and being able to help you, we're doing everything virtually. And this was there. This is not a new thing. We use this system for people who were out of states or out of the country. But as of now, this is the new real estate market. This is a new norm in the market, and all of us needs to get used to this. And my job as a realtor is helping you go over through this and help you make the move. And from here, on each step, we see different difficulties and problems, or whatever it is, different challenges, I would say. I want to, Edwin, take it over and talk with us regarding the step of lending. So with these new changes, what's going on? How is everything being handled?
Well, Adana, thank you very much for having me on your show today.
Sure.
Everyone out there, it is, as Adana said, it just very interesting times. We've never seen this before. I was in the market during 2007 and 8. I've been doing this for over 20 years. And I would say this is a little bit, not a little bit, but much different than what we've seen, back in 2007 and 8. So let me tell you what's going on. I mean, rates are pretty good. So if I go back 2 weeks, or let's say 4 weeks, the last week of February and the first week of March, rates really dipped down to the lowest level in the history of United States. So, for example, a 30-year fix was somewhere around 3%, okay? But then rates started going up starting March 10th, and rates went up and up and up. And then after that, we just got into this virus right now. So right now, on a daily basis, the market is so volatile. And it does not carry the usual historical data and the historical way that rates go up and down. So in the past, we used to say, we look at the 10-year treasury, and if the 10-year treasury is going up, that means rates are going up, and the 10-year treasury is coming down, the rates will come down. They had pretty much a very direct correlation to 10-year treasury, but that's not it right now, because right now there is so many things happening in the market. It's just not the 10-year treasury. with all those, the Federal Reserve, they're trying to help the market and assure mortgage-backed securities. But at the same time, banks are worried about unemployment, and as to what's going to happen with the unemployment. Are people going to be able to pay their payments, so on and so forth? So even banks right now, they're a bit apprehensive to see what they want to do. So given all of that I just said, rates are still good. Yes, are we doing purchases? Of course we're doing purchases. This week alone, I believe I locked 4 or 5 purchases. And are we doing refinances? Absolutely, we're doing refinances, even though rates went up, but rates are still very, very good. For example, a 30-year fixed today, conforming low balance, you're looking at rates of 3.375. Yes, they're higher than 2 weeks ago by 0.25% or 3/8, but still 3.375. It's an amazing rate. So things have changed now. Now that when we're doing loans, it has become a little bit more difficult. There's a little bit more scrutiny in the employment side of it. So because a lot of people, as we all know, with the stay-home mandate that we have from the governor, well, a lot of people are working from home. And are the hours restricted on their employment? What has happened? So before we get loan docs out, for example, we have to do another verification of employment. Usually in the past, we only did 1 verification of employment, but nowadays we do 2 verification, or sometimes 3 verification of employment. And sometimes it gets tough to do the verification of employment because all the employers are not working. So we have to really get the HR manager's cell phone number to give them a call or email them. So it takes longer to do loans right now. And because as to how many verifications we need to do. At the end of the day, are we doing loans? Yes, we are doing loans. Are the rates great? Yes, rates are great. I mean, they're very good rates on conforming sites. What happened 2 weeks ago, in the past, if you remember, I think I was on your show once before, we did talk about stated income loans, for example, with no tax returns, right, or bank statement programs. Those loans, those programs called the non-QM products, for majority of it, it's gone. There's no more profit and loss statement program. And pretty much I can say there's no more bank statement program. So those programs are gone for now. Are they going to come back? We'll see. Maybe a month or 2 or 3 months. Why have they gone? Because they don't have investors who want to take the risk to invest in mortgages like that, without tax returns, without W-2s, without pay stubs. Those are the reasons why that market is gone. Second, jumbo loans. Jumbo loans are loans above $765,000. Now, they have become a little bit more restrictive. Some lenders, they have restricted the cash out limitation on them. Some lenders have taken their pricing higher on jumbo loans. So jumbos are kind of, are we still doing jumbo loans? Yes, we are. But rates have gone up a little bit more than what usually they are, and they have become a little bit more restrictive. So what I want to say that I have clients that have a first and a second right now, or they want to apply for a home equity line of credit, and rates are really, really good. Today, I locked somebody at a rate of 3.375 that they had a 4% rate. Well, we've taken them down to 3.375, and at the same time, I'm giving them a home equity line of credit, for security purposes, right? But before I take the application nowadays, I always ask them, are you working? Are you at home? Has your income been affected by the COVID-19 virus, or so on and so forth? So there's a little bit more work. And, nowadays a transaction could take a minimum of, we could still do purchase transaction in about 30 days, 35 days. Yes. But refinance is probably, I would say 30, 45 days, something like that, 45 days. So it has really slowed down the process because all the verification that we need to do, and we have to make sure that people are employed. So I'm pulling my hair out every day because it's crazy. We have new regulations, for example, from Fannie Mae and Freddie Mac. Just give you an example. Freddie and Fannie have come out and said that if they're okay to not do a full appraisal, that means appraisals don't have to go inside of the property if borrowers are not comfortable with that. So we can do with the just an outside appraisal. On purchases, for example, appraisers will take the MLS pictures from the inside, and they will do an outside appraisal, and that's how the reports will go on. So that's on purchases. But if you want to do a refinance and cash out, unfortunately, they have to do a full appraisal. Okay. So every day, market is changing. Every day, we're getting a new directive from the agencies. And we got to do what we got to do. We've survived everything, and I'm sure we will go through this again, and we'll look back and say, wow, we did it again.
Sure.
So
that's always happening. Right.
Absolutely.
Yes. Perfect.
I don't know if there are any questions from you or not. I'm not on Facebook Live because I'm calling you.
Facebook currently. Maybe later on, if people have questions, they'll type and we'll go back to answer. Just one question I have for you. Some people are talking about we don't pay the mortgage, whatever. However, I know on my end what is the answer, but I want you as a expert explain about that.
Well, I mean, yes, I think, I'm looking at it on TV and I'm reading the memos. I think Freddie Mac and Fannie Mae, they came out and said that on conforming loans, up to loans of $765,000, maybe you could have 2 months of forbearance. That means you don't have to make your payments, and potentially it will get added to your loan balance. But it's not a blanket statement. That means everyone needs to call their own loan servicer, that means whoever they make their payments to, and ask them what is their requirement, what is it that they can do for them. So we cannot sit here and say, well, what is B of A doing, what is Wells Fargo doing, what is Citi doing, what is Mr. Cooper doing. Everybody is kind of doing something maybe differently. So I can't really give you an answer, but yes, there is a directive for 2 months of forbearance, but they need to call their own servicer and find out.
Calling their own lender and know what is the answer.
Yeah. Yes.
Perfect. I have no more questions, Edwin. Thank you very much. Guys, you are listening. If you have any questions, feel free calling me, calling Edwin, text, email, whatever. We are always here to help you.
Thank you very much. Peace. Take care. Bye-bye.
Bye.